Hi guys, good afternoon and welcome to Business Lunch. I'm Pavitra Parekh and we have lots to talk about today, but a quick look at the markets. We definitely have ourselves a down day, but we've come significantly off the day's low. So right now it's just around a 60-point cut that we are seeing on the index. There you can see it. We've come off the lows quite well, but there is broad-based weakness that we're seeing in the market. So all sectoral indices in the red, barring just the IT pack. The Nifty Bank is where you're seeing a lot of the pain today. So that index is down around 225 points. That has also recovered significantly, but this is where you're seeing a lot of pain come through, especially in names like Axis, Kotak, ICICI. So that's what's going on with the market action. Declines once again outpacing what we're seeing on the advances front, and it is definitely a down day. Also ahead of that big cue that we have from the US, which is that the CPI data will come out later today. So I guess a bit of caution ahead of that. But before we talk more about the markets, let's go straight ahead to the Auto Expo in Delhi. Maruti Suzuki unveiled the much-awaited Jimny SUV today. Now, this continues the legacy of the Jimny vehicles. The first of the launch was in 1970. So this is the fourth generation of the Jimny and comes over 20 years after the last version was launched in 1998. Maruti Suzuki had also launched its urban SUV, the Fronx, which has been entirely conceptualized in India. In fact, Parikshit spoke to Maruti Suzuki's MD and CEO on his outlook on the SUV market, as well as that hot EV space. So let's listen in to that conversation.
The SUV space in India is growing very, very fast. And we understand that we need more and more appealing products for the young and vibrant Indian consumers. And today, we launched the two new SUVs, which is important for Maruti Suzuki in India. That is Fronx and this Jimny in 5-door Avatar. And those two new models, I'm sure that will have a very strong appeal to Indian young consumers.
So give me a sense of how many products or how many units of the Jimny have already been sold worldwide?
Worldwide, I think more than 3 million cars sold in the history of Jimny. So Jimny is like a legendary product in the real four-wheel drive, segment. This is like only one product which you can go everywhere at any time.
Right. I would also like to ask you about your current market share in SUVs in India, and how much do you hope to increase it to by the end of 2023?
Because our portfolio was not so strong, so we are struggling in SUV space with very low market share, less than the 15%. But now we are gradually, moving upward because of the full, model change of Brezza last year, and also addition of totally new Grand Vitara last year. So we are climbing up over 15% market share in SUV space month by month.
So how much do you want to target, or how much do you want to achieve by the end of this year, sir?
Surely, with the introduction of those two new SUVs, we should, aim much further heights in SUV space.
Okay. I would like to ask you about the EVX as well, the electric SUV which has been showcased here, it will be launched in 2025. Give us a sense of your product strategy. In the next 5 years, how much of your portfolio would you like to have as electric? How much in internal combustion, and how much on alternate fuels?
Okay. As a Maruti Suzuki, the environmental issue is very, very important, and I am fully agree with the Indian government initiative to reduce carbon emissions. So EV introduction is one of the answer to this, and this EVX is a concept car for us toward 2025. But at the same time, our aim is to contribute to the better society and better environment. So we'd like to employ as many potential or possible technologies as possible. We are technology neutral. Whatever good for India, we will do it. So CNG is one answer, or we will produce bio-CNG as Mr. T. Suzuki introduced yesterday. We will also, pursue this, flex fuel vehicle using ethanol blend. Right. So we will do whatever we can do to, contribute to the better Indian environment.
Right. So the length of both these vehicles is less than 4 meters, both for the Fronx and the Jimny. Has that deliberately been done to keep the prices low, keep the tax pressure low?
Right now, the Indian consumer there is two major segments for the SUV. One is length of around 4.3 meter, and another one is sub 4 meter segment. So there are two big segments. So now this time we are focusing on to this sub 4 meter segment with this those new products.
Okay. My final set of questions, sir. Mr. Toshiro Suzuki, the president of Suzuki Motor Company, said India could soon become the leading manufacturer of passenger cars. What do you think will India need to do in terms of policy to give a conducive environment to the industry to reach that level?
I think in India, we have basically everything already we have in our hand. The whole market is growing, and one of the best market in the world that we can foresee, we can expect the big growth. And also India can become a hub for manufacturing for the export also. And nowadays, the technology make it possible for us to do the good quality products anywhere in the world. So India is not the exception. So in India, we can make very high quality products and for Indian home market as well as for the export.
Right. We hear that the pent-up demand is now getting released. It's coming to an end now. Do you feel that the growth this year in the coming fiscal will be challenging, sir?
Now for us, the demand is still very strong. We have very big back orders right now, and at the same time, our incoming orders are almost par to our production capacity. So for us, the still demand is very, very strong.
Thank you very much for speaking to us, sir.
All right, that is the MD and CEO of Maruti Suzuki talking about their big SUV plan, saying that yes, they were struggling because of a limited portfolio in India, but with the new launches, they aim to expand that, and they're also looking at a market share of 15%. So that is the word coming in from Maruti. In fact, Parikshit also checked out both of Maruti's new SUVs at the Expo. So let's take a look at that.
Maruti Suzuki has launched two new products here at the Auto Expo to boost its SUV lineup. This is the fourth SUV in Maruti's stable. The Jimny, the 5-door Jimny, has finally been launched at the Auto Expo. This comes with the ladder frame chassis, washer headlamps, intuitive knobs with muscle memory on the inside. The seats can recline completely, lot of connected car features. This is an adventure off-roader with the 4x4 capability. It will take on other vehicles in the segment such as the Thar. If you remember the Maruti Gypsy, which was loved in India over 3 decades, well, Maruti is trying to fill the void in its portfolio after the production of Gypsy was stopped. On this side, you have the Fronx, which is a compact SUV that had also been under development for some time. This will take on the likes of the Kia Sonet and the Hyundai Venue as well. So Maruti really hoping that now with these two vehicles, they'll have 5 SUVs in their portfolio and they will be able to boost their SUV market share as well. The bookings for these products have begun and the prices will be announced later this year. But both these vehicles are expected to hit the markets in the next few months.
All right, expected to hit the markets in the next few months. That looks extremely exciting from the Maruti stable. But with that, there's more also coming through from the Auto Expo. Tata Motors also unveiled 12 cars at the Auto Expo, and these also include 5 electric models. In addition, they also unveiled 14 trucks, including hydrogen cell-powered carriers. Tata Sons chairman N. Chandrasekaran spoke exclusively to Parikshit on the sidelines of that mega event. So let's listen into that.
Mr. Chandrasekaran, very strong show by Tata Motors here at the Auto Expo. 26 products unveiled across segments. Give us a sense, what does this show about Tata Motors' growth roadmap? Today, you're a strong number 3, growing in a robust manner. How do you see growth from here?
I think both in commercial vehicles and passenger cars, we are driving towards new mobility. And we are investing in a number of technologies. You've seen us launch a number of electric vehicle passenger cars, and also you're seeing the same thing in commercial vehicles. You got to see what we are doing in the fuel cells and hydrogen powered internal combustion engine vehicles. We are looking at urban mobility as well as long distance trucking as far as the commercial vehicle is concerned. As far as the passenger car is concerned, I think we are investing both in ICE technology as well as in um, electric vehicles. See, we had a lot of product gaps which we have been trying to address. So it's a question of focusing on safety. It's a question of taking a bet on electric mobility. That's a bet we took in 2018, late 18 and 19. And since then, we only doubled and tripled our efforts. So we are committed. We are also wanting to create cars which are very desirable for the consumer. We have to work on both affordability and on driving pleasure. And on technology. On technology is something that we'll continue to invest.
So electric vehicles, how you have come up with a 10 lakh electric vehicle car. How will you continue focusing on bringing down costs and any challenges to electric mobility that you see in the country, which probably need to be done away with?
I think we need to do all ranges. It's not only about a price range at 10 lakhs. We also have to have higher end models because customers have different choices. There are different segments of customers. So we need to continue to work on batteries. I need to work on new technologies. Currently we are with lithium ion and we need to look at other technologies as well. So we are working with, let me put it this way, startups and other innovators. And I think this space will evolve. It's too difficult to say exactly at what time frame and when we will be launching different technologies, but we'll continue to evolve.
Does Tata Motors have a clear path to the number one position in the market?
And we don't talk about position and market share. Our job now, we have a long way to go. Our job is now to continue to produce vehicles which are appreciated by customers and adopted by customers.
Any
so
view?
We've got a long way to go.
All right. So just one final comment on Air India. An unfortunate incident, you've already taken action. Anything that you'd like to tell us?
No, I've already said that as a company and as a group, we fell short in responding to that situation. So we are committed to making steps, whether it is in terms of processes, in terms of other systems, and that we need to correct so that we can handle these situations much better. And more importantly, we can ensure that the customers feel delighted to be with our airlines.
All right, that is Tata Sons Chairman N. Chandrasekaran. But with that, we're going to get into a short break on the show. The first one. Hey guys, welcome back. You're still tuned into Business Lunch. And let's now talk about the big cue that markets are watching this week. That is the US CPI numbers for December will be out this evening. And, you know, as inflation remains top of mind for investors as the Fed continues to raise rates, we have CNBC's Steve Leisman who filed this report on what we could really expect out of the inflation print.
Some new data we have suggests tomorrow's inflation report from the government could be soft with a possible negative headline number, and it would join other private sector data we've been following and suggesting some easing in inflation. The State Street Price Stats Inflation Index, it's called from prices on the web, falling 0.3% month to month for one of its biggest drops since the pandemic. Not surprisingly, it was driven by a sharp decline in fuel prices along with apparel as well. Other sectors like food, they look like they were bouncing back towards the end of the month from a soft November. But the monthly decline pushing the year-over-year rate down to 3.9% from a high of about 6% in the summer. It's been running below the CPI, you can see there year over year, but generally tracks in the direction of it. No guarantee, of course, the CPI tomorrow will follow this data. But it's not the only inflation indicator trending down. We've been looking at these price indices inside a bunch of the survey data. The ISM services price index down 17 points from its peak in April 2022. ISM manufacturing price index down 53 points, and the NFIB percentage of respondents who are raising prices down 30 points from the peak in November 2021. Falling inflation data could explain why the market isn't following the Fed. Barry Knapp from Ironside Macro says it's because Fed Chair Jay Powell's case, the one that says rates need to rise because of rising inflation in core services, Knapp says that is falling apart. He sent me this data, the measure on which Powell focuses on, looked at on a 3-month annualized basis. It's fallen every month since peaking in June at 12% and now stands at just 3.17%. The result is the market pushes rates lower because it has to believe at this point the Fed's done enough and inflation is easing. Fed officials, they kind of acknowledge the progress, but they've stuck to their hawkish comments about higher for longer when it comes to the outlook for rates.
All right, Steve, thanks a lot for taking us through all of those expectations. Perhaps the most important data point that markets are really watching for right now. But India's CPI for the month of December and IIP for the month of November will also be released later this evening. So Lata is joining us to take us through a preview of what is expected this time around. Lata?
Well, the poll has thrown up, the poll done by Ekta has thrown up that it will be 5.85% inflation. That's important because it's below 6. So, you know, the heartbreaking number is only if it is above 6. December itself, the inflation number had fallen, as you can see, to 5.88. So at 5.85, it'll be okay. But what will be a not so good number is the core CPI. Continued to, will continue to remain above the 6% mark. And in the last monetary policy, the Reserve Bank specifically said that they will look at core CPI and they are finding it, not easing as much as they would like it. They would like it also to be at 4%, which is the focus of the MPC, to bring inflation to 4%. So that may continue to rise because services prices are rising. And more importantly, gold has not fallen. And that also works its way into the core CPI. Food CPI will remain flat. Now, even that is not a very positive thing because veggies are going to really fall off a cliff in December, but that's getting countered by a rise in cereals, which is not very good. Milk prices, as we all know, has been inching up, and that's working its way into packaged foods also. So all those three will counterbalance the fall in veggie, and we may still have a 4.7, 4.8 food inflation, which is not, it's not good that it is above 4%. And food is a large part of our CPI. So that would be about CPI. Let me just add a word on IIP. The industrial output number, which will come, is always lagged. It's for November that the data will come. Our poll threw up 2.7, but there are enough number of people who are even at 5%. And here the confusion is coming because the core sector numbers have come for November and they didn't look good. Overall, it was 5.4%. That was more because of the base effect. But if you looked industry by industry, only cement and coal did exceptionally well. Power, we consumed less than we consumed in October. Steel, we consumed less than we consumed in October, which is not very good because October was a festive month. We would not have consumed much. We should have seen an improvement in November. We didn't. But the positive is that, like I told you, coal and cement was good. Non-oil exports did very well in November. So we'll have to wait and see. In terms of industrial output, people will look out very much for consumer durables. Autos did very well. But a lot of consumer goods companies told us that 3Q has not been very good. So IIP number this once will be much watched.
All right, Lata, thanks a lot for taking us through all of those expectations on that macro data expected today. We will, of course, have Lata back on once we do get the data to really take us through the fine print. But we are going to get into a short break now. On the other side, we get you excerpts. Hey guys, welcome back. You're still tuned into Business Lunch, and take a look at the Paytm stock. It has just fallen off a cliff. It's down over 6.5%. This after a big block deal. So around 2 crore shares or 3.1% of the equity that's amounting to around 1100 crore rupees has changed hands at an average price of 540. So on the back of that big block deal, you've seen that stock, sharply in the red right now. And currently it's at around 544 Paytm. And of course, we have spoken about this ever since the listing. We've already seen over 65% of erosion as far as the price goes. But that is Paytm. 2 crore shares trade hands right now, 3.1% of the equity, and it's currently 6% in the red. So do keep that stock on your radar. But with that, we're going to move on to a CNBC-TV18 exclusive now. Former RBI Governor Y.V. Reddy says India is on a growth path, but one needs to constantly check if the country is getting richer without uplifting the poor. Speaking to Lata, he adds that the country is on a sound footing on the current account front, but the government does need to tackle the fiscal deficit problem in a credible manner. So let's listen in to that conversation.
It's all by and large truthful. Nobody can say it's not correct. But you have to also make a distinction. India and its people. India and its people. What's the wealth of India? What's the income of people? Oh. So if we recognize people matter for India, not just India by itself, then you have to view it together. And you have to say that this is what India stands for. These are the people. So if you say India GDP growing very fast, then you should say, what the per capita income, Bangladesh is growing faster.
Okay.
So like this, we should keep constantly, at least the readers, and everybody else should keep constantly in mind that things may have to be, you may have to see little more than when you read the newspapers that we put it that way. And therefore, I think things are, certainly I think short term is very bright. Certainly short term is very bright. Because again, we are taking advantage of two situations. One is we are not very well integrated in the globe. And the globe
which will work to our advantage.
Right. So therefore, that's one. And secondly, we were ourselves not very much into any ideological position, either politically or economically. We were just somewhere in the middle, left, right. So in that ambiguous position of non-commitment to any particular ideology, any particular, we are taking advantage. And I must compliment the Prime Minister for taking advantage of this particular neutral position. The uncommitted country is giving him a lot of dividends now.
Oh, yes. Even geopolitically.
Yeah, geopolitically. That's what I mean. So that's why I would say that I think people have to be perhaps far more careful than what they are now about the Indian economy and its prospects.
Okay.
And the society also, if I put it that.
But we do have twin deficits. So now a budget will come up in less than a month. Do you think fiscal deficit should be a worry? We ran up a deficit because of COVID. Should that be a very important consideration, considering that this year we will end with a near 3% current account deficit also?
First, let me start with the current account deficit. See, current account deficit definitely influences the medium-term view. Because it's not the current account deficit which determines the exchange markets. The exchange markets are determined by capital account. Capital account transactions. So short-term fluctuations are entirely due to. So current account deficit may not be built into day-to-day movements. Current account deficit will be built into structural. Yes. And also the effectiveness of current account deficit in transmission to the exchange is highly diluted because less for us, supply chain, etc. One. And therefore, what we have a situation is that current account should be a worry when people assess our fundamentals, but not for market volatility. For that, I have to look at the capital flows. In the capital flows also, we have slight problems also in capital flow because our reserves have been built out of borrowings basically, and more important, the debt portion and particularly the government portion has been increasing a little large now. Okay. So the composition of capital flows requires a careful watch before we attract any more. But at the moment, we are not in danger as far as the current account is concerned. I think I should say that, as Rangarajan pointed out in his book, the external sector has been put a firm footing. And virtually, we have no, external sector is no longer a constraint for our policy in the last 30 years. We can be very proud. Rangarajan can be very proud. And then you come to the issue
fiscal
of
deficit.
Fiscal deficit. Fiscal deficit, normally, if the current account deficit is not an immediate problem, fiscal deficit also is not an immediate problem. Again, not because we are great, but simply because most of it is funded and domestic bias by the savers, and also institutional exploitation, institutional prescriptions. And then finally, household savings are pretty high. Household financial savings are pretty high. This is a redeeming feature, which always existed, which will continue to exist. But there is a problem still. The problem is that if we stretch it too far, then it could break down. So we have to be very careful in not stretching it too far. So I wouldn't say, I would not worry about fiscal deficit, but I would certainly worry, particularly central government. Because people look at central government basically. The macro analysts may prepare, but markets don't look at totality of the deficit, subnational deficit plus. No, they're considerable government of India debt, direct and indirect.
All right, that is a very interesting conversation with the former Reserve Bank Governor Y.V. Reddy. We're going to wind down on the show with the news that the market is slipping once again. You know, we saw that recovery, but now we're back below that 17,800 mark. So do keep that on your radar. It's over 100 points gone on the Nifty, but that's all on this edition of Business Lunch. You guys stay tuned. Mid-Cap Radar up and 2.